Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Mark, happy Friday. Due to popular demand, we are matching with the company swag.
And this one actually was planned. I found mine 2 days ago, and it's like, you know what? This is perfect for Friday, for HODLween, Halloween, and a little black, a little orange. So I do have the full Halloween outfit. And Morgan Creek Digital right there. And, we have the copper line, which is kind of orangey. But
very
look,
cool.
I got the orange pants, and I have the Bitcoin, rest in peace graveyard, whistling by the graveyard sock game on. Because look, it is Halloween today. We're recording on Halloween. It is the 17th birthday of the white paper. So thank you, Satoshi, for the gift that keeps on giving. And it's just exciting. I did the math, X.
Right.
I didn't do the math.
The
calculator did the math. That, where did it go? Come on. It is 17 years, 6,205 days, 148,920 hours, 8,935,200 minutes, 536,112,000 seconds. So,
wow.
Anyway, you look at it, though,
songs are good.
whether you measure it in years, days, hours, minutes, seconds, it's still very early in Bitcoin time. And so here we are, on Halloween, dressed in our black and our Morgan Creek digital swag, digital current swag. And what are you doing tonight? Are you dressing up?
Well, I'll say, Mark, that I won't bust out into show tunes. That'll probably be for a different episode. But hearing that number gave me some overtures to that show Rent on Broadway, which was like 5,000.
That's right.
Yeah. So today we've got. Halloween in my house, Mark, is about 3 months long. And the preparation for getting the costumes and the kids all excited. So now we welcome our second. After we record, I'll be jumping to their school for a Halloween parade, which is cute. All the kids are going around their school and the parents are watching. So we'll probably rinse and repeat from years prior and go to kind of close by neighborhoods. And where I live, houses are a little bit further apart, but there's some better spots.
Exactly.
I learned my lesson.
You got to pick your spot. So,
exactly.
Our producer, shall we say, Tim, was saying that we should have worn costumes, and we should have.
Oh, yes.
And I relayed to him off air a story. When we used to have all the people in the main office here in Chapel Hill, now we're all remote everywhere. And but when we were all in the office, we'd all come in costume on Halloween. And one day meaning CNBC, called and said, "Hey, can you do a spot?" I'm like, "Well, I'm in costume." And they're like, "Oh, that'd be great. That'd be so fun." And my costume that year I called it the Alpha Hunter, right? So I was dressed like Elmer Fudd. I had the vest and the hunting hat, and I had the play gun. And I went on CNBC in full costume, but no costumes other than I am wearing orange and black, which is Halloweeny. So
yeah, and we know that some folks will be tuning in that joined us on yesterday's webinar, where I think we can continue some of that fun conversation. Where I love the title, where we were thinking about HODLween, and if there's some sort of surprise or spook. The question is, Mark, will we be getting trick or treat coming into November? And there's a lot of kind of mixed signals, and maybe opening up. We can recap some of those points that we got into yesterday, which is a great discussion, specifically on. I loved your comment on one of the costumes that we could have had, let's say if it was me, you, and our producer Tim, we could have all been Jerome Powell, to your point, because there's 3 different
exactly. You know, if you want to do one person, you got to be not one face, not 2 face, but 3 faces. You know, but yeah, if we brought it roped in Tim, so one of us could have been Jerome the hawk, the other could be Jay the dove, or just the letter J, the guy with the backpack and the stimmy checks on the corner, the pusher. So to be Jerome Powell, you got to be all 3. Now he played Jay the dove, cutting rates on Wednesday, but he kind of did the two-face thing with Jerome the hawk, saying, but there might not be, you know, you might not get any more candy in December. And we'll see. Look, he's definitely between a rock and a hard place. I mean, he's going to get kicked out, and they're going to put somebody new in May. And, we'll see. But I do think, yesterday we talked about this is the same topic, Happy HODLween, but navigating the spooky season. And, you got to come up with a title for these things. And I didn't realize that it was going to turn into a pretty spooky month. I mean, October. Now, when everyone believes something, it never happens, right? When everybody thinks one team's going to win, the other team wins. When everybody thinks it's going to be a cold, spring, it's a warm spring. When everybody's sure that whatever it is. And so everyone, and I do mean everyone, was convinced that after, Rectember, we were going to have October, and oh my gosh, we were going to make new all-time highs, and it was going to be great. Well, we did make a high, and actually it was a new all-time high. Yeah. But it wasn't 150 or 180 or 225 or, the one guy said 444. It was 126 on October 6th. And then we went, and we're going to have, I think, only the second negative October, barring, something crazy today. I mean, we are up 2%, today. Yeah. So we're still down for the month about 3%. So I think we're going to have the second negative October. And there are those, and we've talked about this on the show, there are those that say the cycle's over. There's no more 4-year cycle. I'm not in that camp, and that's okay. People can disagree. I definitely believe that the cycle exists because humans are going to human. I actually did think that we were going to go through about now, kind of end of October, beginning of November, based on the previous trend, because the 4-year cycle is not exactly 4 years, because it's not based on time, it's based on blocks. So 2017 was December 18th. Then in 2021, it was November 6th, I think. And so in theory, October 6th this year was the peak. And we talked about this. Some guy tweeted this 3 years ago saying this was going to happen. And sure enough, we hit that new all-time high on October 6th, and we've been down ever since. Now, that doesn't mean we're in crypto winter. It's possible. And people don't like the fact that I even say it's possible. But, here's the funny thing. In the past week, since we were together last week, nothing's happened. I mean, we're the same price. We're down 1%. We're basically the same price as we were a week ago. In the last month, I said, we're down 3%, which is not the end of the world. If you zoom out, over the last year, we're up 52%. I mean, that's a big move. And it's roughly the same move as gold, right? Which is interesting, because gold didn't move much up until the beginning of this year, then took off, the last few months, and now it's given a lot back. Here's the crazy stat. We talked about this yesterday. Gold went up 62%. It added about $10 trillion to the value of gold, from 20 trillion to 30 trillion, a little bit more. And then it lost 6% over 2 days and lost the entire market cap of Bitcoin.
Unbelievable.
$2.5 trillion. And so that just means we got a long way to go for Bitcoin gold equivalents, which is coming. But all that said is, look, Bitcoin is here to stay, right? 17th birthday of the white paper, the Genesis block in January. And 17, you're starting to be real, right? I mean, we're out of the preteen years, we're out of toddlerhood, out of preteen years. You're starting to get toward full grown adult at 17. And
yeah, getting ready for college.
And so they had this roundtable in the Middle East, of the power brokers, right? I mean, Jamie Dimon and Larry Fink and David Rubenstein was doing his moderation thing, which he now loves to do. And he's very good. He's a very good interviewer. And he put these guys on the spot. And he's like, Larry, what are you doing? He's like, well, every stock, every bond, every currency, every commodity. I'm like, dude, that's my line. I tokenize the world. I actually coined that term in 2018. So I should get royalties. But then the funnier 100%. One was, he said, and you, Jamie Dimon, have been a big critic, and now suddenly you're talking about using it. Yeah, I know. Yeah, all the banks, we're all going to use stable coins and blockchains to transfer value in an efficient way. Now, he didn't say Bitcoin, because he still wants to say Bitcoin's a fraud, but he didn't say it. But it is interesting that, we talk about ABCD, right? AI blockchain. We don't just talk about Bitcoin, but Bitcoin is the best use case of blockchain so far. Then chips, and then data. And I think it's interesting that here we are at a massive gathering, and yet all the sheikhs in the back, all watching, and the amount of wealth that was in that room. I mean, we're talking trillions of dollars, right? Of personal and family wealth, as well as, sovereign nation wealth. And they're listening to these guys, and they could have talked about anything they wanted to. How cool is it that they're talking about blockchain? I mean, I just think that's amazing.
I love that, Mark. And I think, Larry finds his way into our show, whether it's Ellison or Fink, in a variety of ways. And we'll say here that, he had his own about face in a trick or treat format. You remember, Mark, in 2017, when we kind of got this thing started, what were his views on Bitcoin, right? Very unfavorable. I believe I'm looking for the quote, saying something.
It's a fraud. Right? I mean, he said it's a fraud. It's a fraud.
Money launderers and thieves.
Yeah.
Was the direct quote, right?
Money launderers, terrorists, right? And we've gone back and forth. Look, if I wanted to do bad stuff, would I use a Sacco money or a traceable electronic currency? I would use a Sacco money, right? I mean, whether they're real or whether they're fake, but they're pieces of paper, they're analog things. Bitcoin's superior to that. And that's the direction we're moving. At the end of the day, that's the direction we're moving. The future of money is here, and happy birthday to you.
Exactly. And, just from that about face, calling it the domain of money launderers and thieves, to then going to an instrument you invest in when you're more frightened, and kind of giving us this idea of where we are in HODLween. And to your point, Mark, of all the things that he could have spoken about at that gathering, BlackRock manages, let's just call it a paltry 12.5 trillion with a T in assets. And they are the largest ETF operator of BTC, which is a little bit less than 100 billion, depending on the price of Bitcoin.
Yeah.
In that particular.
Well, and that T word is so important, X, right?
Yeah.
I said it was, 800 or 535 million seconds that Bitcoin's been alive, but 31,710 years
Unbelievable.
$1 every second, that's 1 trillion. 31,710 years, $1 a second, that's 1 trillion. And so the numbers become mind-boggling. Actually, one thing I want to talk about. So I was at this conference here in Chapel, or actually over in Durham.
Yeah, Mark, you've been
this
busy.
week.
You've been on the road.
I know. It's funny. So travel has changed, right? Most people are like, Zoom works and you don't need to come. And so I haven't traveled that much. I used to travel all the time, like a lot of the time. And, I kind of regret it and didn't see a lot of my kids' stuff. But my older kids, my youngest, he's benefited. He might say, not benefited by me being around a lot more. But the last 2 weeks I was gone 8 of the 10 days. He's like, Dad, this is like the bad old days.
Oh, no.
No. It kind of is. But so I went to this conference, and Pippa Malmgren, who I love, Dr. Pippa, and she's been speaking about this kind of stuff for a long time. One of the things that she talked about, which I thought was really interesting, is this was a room full of allocators and asset managers, 300, lots of great firms, lots of great organizations, big foundations, pensions, real people. And she says, y'all are not ready for what's coming. And everybody's like, what are you talking about? She says, well, you're not ready for a world with no stocks, no bonds, right? No currencies, okay? No hedge funds, no private equity, no venture capital, no corporate structures. And we're like, what the hell are you talking about? She says, we've seen this movie in 1843, the UK. Now remember, in 1843, the United States was in the middle of the Great Depression, like a depression worse than the Great Depression. We were in the free banking era, meaning we had no central bank and everyone could issue their own money. And we were a basket case. We weren't even like an emerging market. We were like the wild worst of the Wild West. And the UK was the dominant superpower. The sun never set on the British Empire. They were the center of the universe. And they got into debt. And up to that point, this is crazy when you think about it. Everyone listening to this call has heard the term the short end of the stick, right?
Right.
I got the short end of the stick. Like, okay, do you know where that comes from? It's kind of like my son asked me the other day, says, Dad, where's the whole 9 yards come from? Like, I actually didn't know. And so I looked it up, and it's, in the war, the big bullets that when those big machine guns on the planes had 9 yards, 27 feet of ribbon. And if you shot all of it, right, that was the whole 9 yards. So you gave someone the whole 9 yards. And not a football term. And
I would have laughed at that.
Yeah. I had no idea. And so the short end of the stick is literally the way they did accounting in the UK was you had things called tally sticks. They were literally pieces of wood. There was a long end that the bank or the creditor kept, and the short end that you or the borrower kept. So the lender kept the long end and the borrower kept the short end. And so if you were in debt, right, you got the short end of the stick. If you were the big, lender, you were the rich man, you had all the long sticks, and you literally carried these sticks with little notches carved in them for the size. I mean, it's mind-boggling, but that's the way they kept track. And the UK got wildly into debt because of some foreign wars. And they said, you know what? We're going to start over. We're going to adopt a new accounting system. We're going to go to dual entry accounting, from the Medicis. And so they basically collected everybody's tally sticks and burned them. So they basically erased all the debt.
Wow.
Now, the funny part is they actually burned down Parliament while they were doing it because they didn't anticipate how hot the fire would get. So they burned down Parliament, so they had to start over. But she said, that's about to happen. What's happening in the US, and this actually, it's interesting because this goes back to today, who actually released the white paper? Like, who is Satoshi Nakamoto? Is it some pseudonymous individual? Is it a group of people like Hal Finney? Or was it the NSA, CIA? I don't know. It's worth contemplating.
Well, again, I think these are the perfect times to speak about this on HODLween. And if you want to kind of add more fuel to the fire, I'm sure you've been seeing the news about MasterCard eyeing a major acquisition, Zero Hash, right? Which is right in the mix for core infrastructure for stablecoins. And they're looking at an estimated 1.5 to 2 billion acquisition. And so this would mean more of what we had anticipated, with the idea that we made the argument all the time that stable coins are not a threat to the US dollar, but a reinforcement of US soft and hard power, for that matter, and the hegemony of our dollar. So when you look at the legacy incumbent players, they're really unable to just do a complete 180. So they will have to acquire competing technologies and offer those services to their customers. And along with that, Mark, we've seen also the launch of other altcoins as ETFs. So we've seen Solana, Litecoin, and Hedera, random, I know, released the other day. And by our friends, follow portfolio company Bitwise, they do extremely well. They had reported 70 million in inflows on the first day of trading, and over 10 million in trading volume in the first hour. And so I think when you're looking at this, we had kind of speculated, I'd say, Mark, to grossly oversimplify, there's so many ways you can cut this. But if I'm looking at a graph and I'm looking at kind of the four points in my graph, I will have one point as just Bitcoin, right? And then I'll have another area of just altcoins. And I'll have another area where they will be stable coins. And then I'll have kind of my apps or my dApps infrastructure play as a fourth, in terms of, let's call it the major areas of interest for a VC, and moreover, what could mean growth for the future market, right? So we know what's going on with Bitcoin. It's not really slowing down. Maybe the day-to-day change might have some people questioning, what does it mean long-term? Harder to say. But if you kind of look at the overall pie of this graph, everything is increasing.
Yeah.
Whether or not it's, a little bit down on the right side or a little bit up on the left side, the idea that you have these altcoins, and there are more coming, by the way, there's 85 that are on deck. And I think what this will mean is there's going to be a lot of washed out trades. I'm going to call that point blank, because you're going to see these coins can't all survive.
No, look, they can't at all. And look, this is a little bit similar to that free banking era, right?
Sure.
In the 1800s, ushered in by Jackson, right?
Mm-hmm.
President Jackson, he didn't like the fact that the first national bank of the U.S. from 1776 to 1796, 20 years, and then the second national bank, okay, he said, the problem is they're owned by the big European rich families. I don't like that. And so we're not going to renew the charter, and we're going to go into this free banking era. And so then everybody, right, Texas, Procter and Gamble, all these different entities issued their own money. So it wasn't just dollars. So if you look at the analog and you say, well, okay, if Bitcoin is this new thing, so like you had the tally sticks, and the pound sterling was behind those tally sticks, but it was just an accounting system, and they kept printing pound sterling notes out of thin air to back the debt. The problem with that is it used to be a pound note. It's called a pound note because you could exchange it for a pound of sterling silver, hence pound sterling, right? Today, 338 years later, it'd take you like 174 pounds of sterling silver to get because it's just been devalued by printing so many of them. And so if you think about, well, if the pound was the unit, and then they wiped out the old pounds and went with the new pounds, And in the US, we had the dollar, and then we had the Confederate dollar and the Procter and Gamble dollar and the Texas dollar. And then we said, no, we're just kidding. Wiped those, and they all went away, right? Confederate money became worthless, but for a while, it had value. So people ascribe value to things, whether it's an altcoin like Dogecoin. There's no reason for Dogecoin to exist, right? None. I mean, zero. The fact that Elon, or Mark Cuban, whoever created it, that's it. It's just like, but as long as people are willing to exchange it between themselves for some other thing that has value, right? To get a Dogecoin, you got to buy it with something else that has value, a stable coin or Bitcoin or Ethereum. Or now the question is, well, what gives those things value? Belief and custom. And so, but at the end of the day, underneath it all is gold, right? Gold sits at the base layer of all money. Central banks hold it. They issue debt on top of it. Right, as JP Morgan said, gold is money, everything else is just credit. So we have this credit system that sits on top of money. Well, we can adjust that. Like, we could have a world where Bitcoin becomes that base layer. And you could have a world where something like a Dogecoin or even XRP, I doubt it will be XRP, sorry, Army, but I doubt it will be XRP, could create a substrate on top of Bitcoin. If Bitcoin's digital gold, then we could have these other things. My guess is there'll be digital currencies of countries. Now, Sinister Saturday part is that would lead to the dystopian nightmare of controllable money, right? That the BIS talks about, and they're already doing in China, where you can tie your social credit score to your digital currency. And if you fall below a certain score, your money just doesn't work. That is a dystopian nightmare, right? You can't do that with Bitcoin. So at the end of the day, saving in Bitcoin, shameless plug for one of our portfolio companies, save in Bitcoin and use Arch lending to borrow against it. This is what the super wealthy do, right? They own this stock. They never sell it. They just borrow against it and live their life. And then they don't have any income tax because they don't have any income. They're getting super rich because their equity keeps appreciating, and they pay the interest like, whatever, it's working capital. So
100%, Mark. And I think that market that you ended on, the idea of crypto-based lending is exploding right now, right? So the idea here that you can borrow against your crypto without selling or getting any tax hits has quickly, almost overnight, Mark, produced a $10 billion market, with some estimates going to $61 billion in 2031.
Yeah.
So I think that estimate is low, actually.
Oh, I think that's way, I'll take the over. I will definitely take the over
on that.
And, that was the funny thing. There was this big scandal recently where, some players were betting on games in basketball, and some coach was posting. And somebody posted this great meme. It showed the person explaining how you bet on the game, sponsored by FanDuel, right? On ESPN. And
we're doomed.
So you're shocked that there's a betting scandal when the whole industry now is financed by gambling. And look, we've become gambling has existed forever. It's one of the oldest pastimes, and it's massive, right? Macau, Vegas. And when we locked the world down and you couldn't go to Vegas and you couldn't go to Macau, what did you do? You started gambling in your apartment. Well, how did you do that? On the internet. Well, how did you do that? Well, there weren't any games being played, right? There weren't any sports. So, but these stocks are trading. I could gamble on that. Well, now we've evolved from just gambling on stocks, right? With leverage and all kinds of crazy stuff. So now we have prediction markets. So now I can gamble on the direction of a stock, just like you can bet on, is this guy going to strike out the next batter? Or is this person going to get a hit? Or is Michigan going to score 21 points or 24 points?
Mm-hmm.
we become a society of degenerate gamblers. And not all of us, but it's the prediction market thing, like poly market. I mean, the kid, and I mean that in a loving way, that he's young, is now a multi billion. He's the youngest self-made billionaire maybe ever. I mean,
Wow.
it's crazy. And yet, and you got the perps market, the perpetuals market, where people are unfortunately gambling on the price of Bitcoin. Um, Investing, and we've talked about this over and over, right? You want to invest? Invest. Great. What's an investor? An investor is someone who tries to buy something below its fair value, or someone who buys something that's growing really fast, right? That's going to accrete.
Mm-hmm.
Then there are traders, and nothing wrong with trading. You don't really care about the value. You just need movement, and you're trying to scalp. And that's tough in a world of high frequency trading. Trading against Ken Griffin, I'm going to take the under on that. But here I'm talking like a gambler, but I don't really do that. So then you got the speculators. Remember, speculators just the opposite side of a hedger. There are lots of hedgers in this world. Hedgers are people who produce something and have to sell it to pay the bills. The speculator just takes the other side of that because they have no interest in the underlying asset. But then there's the gamblers, and the gamblers are the people that they really don't have any knowledge of what they're gambling on, right? You gambling, I mean, anyone, not you personally, but gambling on whether someone's going to get a hit at their next at bat, you have no knowledge. I mean, that's a totally random thing. I mean, look, betting on your favorite team, even that you have no knowledge. You have no control. You're not the coach. You have no idea if the player woke up with a stomach ache. I mean, anyway.
Yeah. And I think one of the good conversations that we brought up yesterday, I'll quickly transition to our chart of the week, was how interesting the comparisons are between digital gold and real gold, right? So if we kind of look at this idea, we spoke about 4,300 an ounce for gold, and then having a pullback 5 or 6% across, 1 or 2 sessions. What's happening here also, Mark, is that you have this kind of classic overbought behavior driving some momentum. And kind of what's different with real mining versus digital mining is when the price of gold gets higher, that spread can increase in terms of making it a little bit more cost effective to kind of expand your gold extraction operations, because nobody really knows just how much gold there is in the world, right? But we know exactly how much Bitcoin there is. Maybe not how much is currently available because some have been lost or replaced. But there will always be 21 million. As far as the gold, that number can vary, and of course you can recycle gold in jewelry. So that kind of creates some more pressure on the margins for actual digital Bitcoin mining, where those can be a lot more volatile. Things like
come on, I mean, absolutely. And then I don't actually believe this, but there are those that actually believe that we're going to shoot rockets into space with people on them and mining equipment, and we're going to go to this. I can't remember the name of this asteroid that supposedly is worth $15 quintillion in minerals, gold included. So if we're going to bring back all that gold from the asteroids, what would that do to the price of gold? Now, you can't do that in Bitcoin, no matter how hard you try, right? You can't create more Bitcoin out of an asteroid.
Exactly right. So I will show my screen and we'll take a look at some pretty interesting charts that kind of align these two areas, that we can kind of look and we can be the judge, jury, and executioner here on kind of how these two stack up with one another. And I think that these charts are really compelling. So I will try to see if I can just share this and we can dive on in. And this will be a multiple. My favorite chart of the week are charts of the week. This will be
right. If 1 is good, 2
chart.
is better, and 3 is really, really much better.
Exactly. So I will share my screen here, and
like Jerome, J, and J. So
Exactly. So the first chart that we have, Mark, is your net BTC versus gold ETF flows, which is kind of what everybody starts and looks at when you talk about BTC. And for those that are on audio only, you could always check out the chart of the week. And if we're matching or Bitcoin game reveal on YouTube, and of course, keep listening wherever you podcast. So what we're seeing here is just this year, Mark, in one line, the blue on the bottom is BTC. And gosh, Mark, as of September, I'm not sure what happened on the gold ETF flow, the gray line.
yeah.
Again, small chart crime between the blue and the black. You could use any colors in the world. Red and blue are usually my favorite to show two different points of data. So this is one, Mark, and this is showing the cumulative flow. There are some interesting points.
Oh no, look, I mean, humans do two things really, really well. We buy what we wish we would have bought, and we sell what we're about to need. So, you can see that we had $30 billion. Okay. That's actually, equivalent to all the flows for Bitcoin for the year that occurred from August to October in gold. Well, wait a minute. That was after the price had already run 50+%. So where were those investors at the beginning of the year? They weren't buying. So humans love momentum. They love they love the comfort of the crowd, the warmth of the herd, and that's safe, but it's eventually dangerous, because what all of those investors from kind of September and October learned the hard way is buying at the peak of a commodity is really a bad idea. Now, one caveat on that is commodities don't function the same way as equity indices. Equity indices have this thing called capitalization weighting. So the more things go up, like NVIDIA, the more the indexes have to buy it. So there is a self-perpetuating momentum, and it works until it doesn't, and you just never know when it will eventually crash, but it eventually will. But this is different. What eventually happens is the people see the price and they actually want to buy it because it has value. And so at some point you get a short squeeze. And once that short squeeze happens, you get these violent moves up, which is exactly what happened. And then the money really starts to flow and it exacerbates the short squeeze. And we're seeing that in the nuclear stocks. We're seeing it in the quantum stocks. We saw it in gold. But eventually, trees don't grow to the sky. And people look at it, whoa, wait a second. This is overbought, meaning there's too much activity. And we get that correction. So
yeah, this second chart, Mark, speaks exactly to your point, which is why I love multiple charts, because you can continue on the thread that you so eloquently played on, Mark, which is on one, you've got two pieces of information notable here. You've got on one side, you've got the overall gold price going back over a decade, and then the production costs for ASICs. Right. So this is really kind of pinning the two of them side by side. And so we basically find that gold prices have diverged significantly from production costs, especially as you get into this overbought pattern in the past year. And I think, this chart is really kind of pointing to a lot of the things that we might feel intrinsically with things like the fear index being at all-time highs. When I see this, it makes me question a couple of statements. It makes me question the idea that, gold is money and everything else is just a promise. I wonder if gold is also a promise when I look at this and recognize that because it can kind of be manipulated very, very quickly in a short amount of time, relative to something like an ASIC that's going to produce a given block of information. Like, take a look at this.
No, it's beautiful. And to that point, X, when there was only physical gold, it was axiomatically true, right?
Right.
Gold is money. But when you can create a commodity out of thin air, right, in the financialized markets, then it is no longer the same. And all commodities have this flaw. whether it's oil, which this happens all the time in oil prices, whether it's gold, whether it's platinum or silver, or now Bitcoin. Bitcoin was classified as a commodity for a reason. That was not accidental. It was not a gift from the gods. It was part of the plan. Because if you can create a paper Bitcoin, right, which no one can do in the real world structure, right? The ASICs are generating the blocks, and those Bitcoin are awarded to the miners. You can't create Bitcoin. You can go mine a piece of gold, right? You can buy some land, you can dig a hole, and you can try to find gold. Can't do that with Bitcoin. You have to participate in the network. But if you can create a paper Bitcoin, and then you can actually short it, that leads to potential for manipulation, which we saw with the big whales. Why I had the whale socks on last week.
Right.
Anyway.
Yeah. So then the third chart, which I jumped to in advance, is this idea of BTC price versus Mara mining cost is a big miner. And this is just kind of driving home the point of how big those gaps are in terms of the compression from mining difficulty. And this is what we spoke about during the summer, where what's really beautifully designed, I'll use this phrase, what's really beautifully designed about the Bitcoin blockchain is that the network will kind of self-correct. If mining becomes too difficult in terms of the problems that are given to miners, the mathematical problems that will be used for them to add new blocks into the blockchain and get their reward in Bitcoin. If that becomes too easy, well, then the difficulty goes up. That's not the same for something like gold. If it's very easy to mine gold, more people mine gold.
More people mine gold. Exactly. I do love that point. And the other thing that I think is very interesting here is, again, this is the classic hedger versus speculator. So the hedger, right, the person producing the gray lines, okay, they can produce a Bitcoin for $60,000, right? They pay for electricity, they pay for their rent, they pay for the miners, and they can produce that. Now, they have to pay their bills in fiat. So they are forced to sell. In the old days, when there weren't paper options, they would have to sell the physical Bitcoin. Now they're ones and zeros, but they actually have to sell the Bitcoins. Well, now they can hold the Bitcoins. They can go short paper Bitcoins, okay, and be quote unquote hedged, market neutral, and they can then pay the bills with fiat through financialization. Now, you can do that one time. There's like a step function where you can do that, because ultimately you have to pledge some of your underlying assets against your short interest. So there is a natural, and you see it here, there's this step function, right? We basically have a flat line in the price, and then we have a step function, and then we kind of have a flat line, then we have a step function. So that financialization has certainly impacted the ratio of underlying cost to profit or price. And this is why I'm convinced that the 4-year cycle will still exist, which is every 4 years, you're going to cut the amount of block rewards in half. Well, then in theory, half the miners should go out of business. Well, that's not going to happen. So what's going to happen is they won't sell unless they get a higher price.
Yeah, exactly. And that you are exactly on the same wavelength of the next chart, number 4, which is the idea of new BTC supply versus gold supply. And if you're seeing this huge drop off and relative to the price and the issuance, this is the halving in a nutshell. Yep. This is why it's designed to have, supply capped at 450 BTC a day, having folks compete for that. And as, institutional adoption continues to climb, you're going to see, this price respond, hopefully, in a correlated way, but not always, because we do see these momentary hiccups. Bitcoin still reacts sometimes very wildly to things like tariff conversations, earn conversations, compute. So it's not totally devoid of humaning, but there's more of a brain inside that is programmatically based which can hopefully reduce some behavioral finance hiccups that you have with gold. Is really the
Absolutely.
final point. So I'm glad we're able to dig into that one, Mark, and we'll probably conclude with a couple of rapid fire things that we'll keep an eye on. And a good Halloween scary movie leaves some fear right at the end when you think that the bad guy is not going to harm you anymore. They just pop up. So one thing that popped up was just when you thought it was safe to have an M&A deal, it gets kind of taken away. And what we're talking about here is it was a big deal that was supposed to happen between CoreWeave and Core Scientific, one of the big miners on the Bitcoin side. So this was pretty much, a good to go. A lot of folks were thinking about this as a really big shift into the industry. It was supposed to be a large, $9 billion acquisition, but false. Actually, at the last minute, some folks came in and nuked this deal. We will see, Mark, if there's going to be recovery here. We'll keep an eye on that. I think both sides are kind of motivated. It's not the first time that the deal has fallen through, but in true scary movie format, I'll end in a way that is somewhat hopeful and see, what could happen in the next deal. Our friends over in Ethereum land, Consensus, they're preparing for a historic IPO in what many call a redemption act. If you recall the 2020 takedowns and drama around MetaMask and Project North Star, which we don't have too much time to rehash today, they're back at it.
Yep.
And by the likes of it, this could be something that could also help move our markets forward. Couldn't be a better time to bring an ETH related company to market. And we wish our friends Joe, fellow Core's member, Joe Lubin, all the luck as they prepare for the next chapter of their journey.
Yeah, look, I mean, so much to talk about in terms of, different blockchains, EVMs, and, the use cases for the technology. Ultimately, all of this technology is going to be widely adopted. Again, there's Jamie Dimon using smart contracts, and he doesn't even he's a smart guy, but he doesn't really understand the technology. But he was fed a few buzzwords and he talked about it. But yes, EVMs, virtual machines, and smart contracts are going to be integrated into all payment systems, and all of the future in terms of payment and exchange of value is going to occur over blockchains, right? This is the new long end of the stick. This is the new accounting system, triple entry accounting, secured by power, and you can't fake that. So all of this movement is real, and it's good for the whole ecosystem, other than meme coins. I mean, those don't count. But there's even a role for the speculative class to play around in that too. To me, meme coins are just the modern day version of penny stocks, which have been around forever. And when there's money involved, there's going to be speculation. There's going to be fraudsters. There's going to be scammers. There's going to be carnival barkers. And, you have to be careful. But the main part of the technology story, like Ethereum, like Solana, like Avalanche, all of these chains are finding use cases in the broader ecosystem, and every business, whether it's a PayPal or a Venmo, is eventually going to migrate to these new rails. Whether it's JP Morgan or Bank of America, they're all going to migrate to these rails. And you've heard me say it. I don't have my prop, but my grandkids will never have leather wallets. They'll never use paper money. They won't ever drive themselves either. But technology is like, my son is doing my 14-year-old is doing his first, it's crazy, he's not even 15 yet. And he's going to his first driving thing today from 4:30 to 6:30. And
wow,
that's an amazing thing, because not that many years from now, they'll still maybe get a driver's license, maybe more of an ID, but you actually won't drive. I mean, you literally will be driven. Now, it's a ways out. And as we've heard all the horror stories on Halloween of the unsupervised robo taxis crashing into many things, we're still not there. But it is coming, and we're not there yet for everyone to say, yeah, I'm going to keep all of my assets in a digital wallet. I am not going to have a leather wallet. I'm not going to have a bank account or fiat. I'm going to do everything on a Bitcoin standard. And then I'm going to have these other chains to do stable coins and like, it's coming and it's exciting. And it's why we get up and go to work every day and why we're having more fun. At least me, I'm having more fun than I've ever had in my career. And it's awesome to be on this journey together.
Agreed, Mark. Couldn't have said it better myself. Happy HODLween to you and to all of our listeners, and happy HODLween for all of our Bitcoin holders and all of our altcoin holders. There's some value here in the system. We'll remind our listeners, as always, to rate, review, subscribe, and to stay current.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.